Hello everyone, I am Tanupriya Agarwal, a student of Shahid Bhagat Singh College. I am in third year pursuing BCom Honours. I am here to give a presentation for my subject Goods and Services Tax. The topic that I have chosen to present is GST compensation and the recent impasse on it. Now let's begin with the presentation. As I said, I'll talk about GST compensation, the what, why, how, and when of it, understanding its relevance and need today. Also, I'll talk about the very recent deadlock between the central and the state governments and the outcome. So let's first understand what is GST compensation. We know that GST in India was enacted with the passing of the Constitution 101st Amendment Act 2016. GST is a comprehensive, multi-stage, destination-based tax. Comprehensive because it has subsumed almost all the indirect taxes except a few state taxes. Now, it was very clear that implementation of GST will lead to a shortfall in revenue for states, at least in the beginning. So, there was a provision to compensate the states for any loss of revenue arising out of GST implementation. States had agreed to it as they had ceded almost all of their powers to impose local level taxes in their states to the center in the new GST regime. And the states would receive the SGST, which is the state GST, a component of GST, and a share of IGST, that is integrated GST, along with any revenue shortfall arising from the transition. This would continue for a period of 5 years, and it would end in 2022. Now, coming to the need and why at all a GST compensation was needed. As I said, that GST subsumes various taxes levied by states earlier, including sales tax, entertainment tax, and entry tax, except the revenue from excise on alcohol and sale of alcohol and petroleum products. Secondly, it was set to reduce the revenue, especially of the manufacturer states, as the ability to charge revenue was being shifted from the origin states, that is, the states which manufactured a good or service, to the states where it was consumed, that is, the destination state. Now, how is this calculated, the compensation? For this, this is defined under Section 7 of the GST, Compensation to States Act 2017. For this, there was a revenue assumption made based on 14% compounded growth from the base year, which was 2015 and 16. And then the difference between the projected revenue and the actual revenue was calculated to arrive at the compensation which a state was entitled to receive for a particular year. Now, who pays for the compensation? The compensation fund gets its funds through a compensation cess which is levied on demerit goods. These are certain luxury and sin goods such as cigarettes and tobacco products, pan masala, caffeinated beverages, coal, and certain passenger vehicles. The various goods and their respective cess rates as prescribed under the GST Compensation to States Act 2017 are listed here. For pan masala, it's 60%. Unmanufactured tobacco with lime tube featuring a brand name carries 65% cess. Unmanufactured tobacco without lime tube with the brand name carries 71% cess. Branded hookah carries 72%. Pan masala containing tobacco carries 204%. Cheroots and cigar carry 21% or 4,170 per thousand, whichever is higher. Cigarillos carry 21% or 4,170 per thousand, whichever is higher. Aerated waters carry 12%. Branded tobacco refuse carry 61%. Here are other items with their respective cess rates. These are cigarettes, coal products, motor cars, LPG and CNG, motor vehicles, and other motor vehicles. Now let's see how is this calculated. How is the compensation cess calculated? Now this is levied over and above the GST which is paid in relation to a particular supply. The calculation is same as that of GST. That is under section 15 of the CGST Act. The prescribed rate is applied to the transaction value to arrive at the cess liability. Now coming to the actual picture, how much compensation has been paid by the centre to the states? In 2018 and 19, the centre gave 81,141 crores to the states as GST compensation. For the year 2019 and 20, the compensation which was required almost doubled to 1.65 lakh crores. This was on account of the economic slowdown that the economy witnessed in 2019 and 20, and which also led to a nominal GDP growth of 7.2% as against the projected rate of GDP growth, which was 12% according to the union budget for 19 and 20. Now let's see what happened in 2019 and 20. So in 1920, GST revenue over 18-19 grew just 4%. Also, the goods which carry the compensation cess, that is the demerit goods, were affected by the economic slowdown. For instance, sales of passenger vehicles declined by almost 18%, and coal offtake from domestic coal companies reduced by nearly 5% over the previous year. So, the overall growth of the compensation cess was 0.4%, while the shortfall, the compensation requirement, grew by 104%. So this led to a huge shortfall of 70,000 crore. Eventually, the centre could not pay all of it in the same year, and it paid 64,000 crore rupees to the states for the year 2019 and 20 in the next, that is financial year 2020 and 21. So it was evident that shortfall issues surfaced almost in 2019 when payments due for August to September 2019 were delayed. Since then, almost all subsequent payments have been cascading delays. So what was the recent impasse between the centre and states? Recently, in a meeting, Finance Minister Nirmala Sitharaman said that the GST compensation requirement for this year would be around 3 lakh crore, while the actual cess collection will be around 65,000 crore, hence leading to a compensation shortfall of 2.35 lakh crore. Why did this happen? Because the COVID-19 pandemic struck the economy and hampered the government's revenue collection program. So what was the centre's response? The centre in a meeting said that out of 2.35 lakh crore, not all was accountable to GST implementation. Rather, a sum of 97,000 crore was arising out of GST, and the balance 1.35 lakh crore was attributable, as the finance minister said, to an act of God. That is independent of implementation of the GST regime. So the centre gave two options to the states. The first was the states would be allowed to borrow the shortfall of 97,000 crore under a special window which would be facilitated by the RBI, and the same amount can be paid back out of the GST compensation fund after June 2022. For this, the centre relaxed the FRBM, that is the fiscal responsibility and budget management limit for the states by 0.5%, and this was done delinking from the conditions announced earlier as part of the pandemic package linked to the implementation of reform measures like universalization of One Nation, One Ration Card, ease of doing business, power distribution, and augmentation of urban local body revenues, which was announced earlier by the centre. The second option available with the states was to borrow the entire shortfall of 2.35 lakh crore, also facilitated by the RBI, but here the centre did not provide any FRBM relaxation as mentioned in the first option. So there were many states with dissenting views, including Kerala, Punjab, Delhi and West Bengal. After reaching an agreement with them, the Finance Ministry in October 2020 said that it would be the center which would borrow on behalf of the states, and then it would give the amount to the states as back to back loans, and the amount was increased from 97,000 crore to 1.1 lakh crore. This would not reflect in the fiscal deficit of the center and will appear as capital receipts for state governments. Recently, in a statement issued on 20th February 2021, it was said, the finance ministry said that out of the 1.1 lakh crore due amount, the center has released 1.1 lakh crore, that is 90%, to the respective states and union territories in a period of 4 months, that is the since when the center started the special window in October 2020. Now, this unresolved question, which is expected to generate heat when the GST Council meets this quarter, that is, what will happen in 2022. Recently, the 15th Finance Commission estimated that for the financial year 21-22 and the June quarter of 2023, the total GST shortfall of that will be witnessed by the states will be 7.1 trillion, while the actual cess collection will be around 2.25 trillion, hence leading to a large amount of shortfall. It is clearly evident that the states dependent on the compensation from the center will face a huge revenue gap due to a cut in these grants. States point to depleting tax revenues and the center's promise to compensate them for the loss, even as the union government struggles to raise revenues. Also, now states are getting restless with COVID-19 continuing to wreak havoc on their revenues, and the union budget making no mention of how states will be compensated for an anticipated GST revenue gap the next financial year. However, we can see a sigh of relief here as the GST revenues are expected to stabilize in the coming months on account of the restrictions on use of unmatched input tax credit, e-invoicing across taxpayers, and more sectors of the economy such as hospitality, mobility, and entertainment, which would open up further across states. Also, the economy is set to witness a positive growth in the coming year. The 15th Finance Commission has also said that it expects the cess levied on luxury and sin goods, that is the demerit goods, to continue in some form till financial year 2026 in view of the cash requirement. Hence, to what extent all these concerns will be solved and alleviated, all this remains to be seen until the next meeting by GST Council takes place. That's all from my side. Thank you.